Hello, and thank you so much for joining me, Alex Glaser, with Coldwell Banker Vaughn and Company Realtors here in Richmond, Virginia, for your June 2013 Richmond real estate market update. I'm sure if you've been watching or reading the news, you've heard some good things about what's going on here in the real estate market, and that's why I'd like to start this month with what's been happening on here in the news. The first slide I'm going to show you is the FHFA Regional Home Price Report that came out for the first quarter in 2013. Now, the reason this is important is we don't need to know what's just going on here in Richmond in our market. It's good to know what's happening across the country. That way we can tell, is there really a full housing recovery taking place? Are people more confident right now? Is the economy getting better? Are people realizing that home ownership is part of the American dream again? And as you can see from this slide, coast to coast, north to south, Alaska, Hawaii, prices are going up year over year. So this is the first quarter 2013 compared to the first quarter of 2012. And if we take a look at that, we can see that across the country, there is a housing recovery, and it looks like it's in full speed. We can see right here that there's only two states with prices being less than they were just a year ago. West Virginia, which is 0.2% less, and Connecticut at 0.7. Really, not that much difference there. So if we're looking at just every region in general, in almost every state in the country, prices are better than they were this time last year. And it's important that we grasp that, ladies and gentlemen. If you're considering buying real estate, please understand that waiting, let's say that if you're in a multi-bid offer situation and you're waiting saying, nah, if we don't get this house, we'll just get the next one. Understand that the next one at this rate is going to cost you more money. And I think that this map right here is showing the FHA state home prices are really bang that home. Across the country, housing is coming back. And buyers are really starting to realize it. Here's a survey I saw on Housing Wire. The percentage of buyers considering paying more for a home now than just 90 days ago because of low inventory. And if we look at that, again, it's looking 90 days prior, 26% in the fourth quarter of 2012 said, you know what, I'm willing to pay more because inventory's down. That number jumped to 34% in the first quarter, and then 41% here in the second quarter. So as we can see, that buyers themselves are realizing that because of this low inventory we're seeing, not only in Richmond, but across the country, that they're going to start having to hike up their offers, more and more of them, to get the properties they want. So I know the big question everyone's asking, well, where are home prices headed? Well, the new home price expectation survey just came out this month, and this is a nationwide survey of a panel of over 100 experts, being economics, real estate experts, real estate investors, market strategists. And they go through with 100 people and they average and they see what everyone's predicting. And here's the historical look and a projection going forward. If we see pre-bubble from 97 to 99, houses in the country appreciated about 3.6% on an annual basis. Obviously, during the bubble, that more than doubled. There was an anomaly, and that had to be corrected, which shows the red bar there. And since the beginning of the recovery in November 2011, that's when prices started to turn around to March of 2013, which is the last of what we have at 4.3%. So we can already see that we're ahead of a normal appreciation, and that expectations from now into 2017 show that we're going to be a little bit ahead of that normal appreciation. So, ladies and gentlemen, they're not predicting that prices are going to go through the roof. There's no new bubble forming. But the buyers should realize that if you wait to buy a house, it's going to start costing you more money. And if we look at it breakdown year by year, and again, this is why I'm saying that, in my opinion, there's no bubble forming. For over the next 18 months, prices are going to go up more than that 3.6 historic average normal appreciation. They're going to make up a little bit more because when the pendulum swung down over the last recession, prices, they really fell too far. And in many markets, they're going to be recovering a little bit faster than normal to get back to where they really should be. And that correction might take a couple years. And then if we're looking at the survey here from 2015 on, we'll be back to a normal appreciation in this country. A normal market, not a bubble, not a bad market, just a normal housing market. And I want you to see how much more optimistic people really have been in this survey here, because we've been tracking it for the last couple years. And here's what they said projected for 2013 and 14 effective 3 years ago, 2 years ago, and 1 year ago. The dark green line is now. And we can see that 3 years ago that they were getting more and more negative about where prices were going this year and next year. 3 years ago, they said, well, they thought it was only going to be up 3.5%. And then 2 years ago, they're like, well, no, the market's not looking good. It's probably looking worse. Maybe it's only going to be up 2.2%. And then even a year ago, things weren't that good. And they said, well, prices are only going to go up about 1.3%. Now they're becoming much more optimistic again. We've hit the bottom. We've turned the corner. We're heading in a really, really good direction now. So let's look at the pending home sales. This first line is going to be the national pending home sales for each month, and the darkest green being this year. This slide shows 2011, 2012, and what we've had so far in 2013. And as you can see, the amount of homes selling each month nationally keeps going up. And the best part, it's staying above the historically healthy level. So now let's take it more local. Let's see what's been happening here in Richmond. Last month in May, we had 1,460 homes sell here in Richmond and the surrounding areas. And if you're curious, the area codes at the bottom there, not the area codes, but the real estate code numbers, shows where we pulled all our data from, Richmond and the surrounding counties. And with that, we had an active inventory of only 4,592. So that means 32% of our active inventory sold last month, leaving us running with about a 3-month supply of homes. Now, if you take a look at this slide, you can see that actually puts our market as a whole into an appreciating area, less than 4 months supply. But please know, as with Richmond, and I'm sure almost every other market in America, every city has its own micro markets. There's going to be specific areas and neighborhoods that are going to be more popular. And those are going to be the neighborhoods that we're going to see the appreciation a little bit quicker, while there's still other neighborhoods that may not be as popular. They're going to be dragging behind. They may not be depreciating, but they be more with their pricing stagnant. And this is where having a professional analysis done for you would really help determine exactly what's going on where you live. And if you'd like one, I'd be more than happy to provide you one for free. I'll give you my contact info here once we're all done. Just reach out. I'll be more than happy to help you out. So if we look at Richmond over the last year and a half, and you can see the amount of homes selling each month here locally has gone up dramatically starting in 2013. Another key to look at is the inventory. As we are still very historically low, it is starting to slowly rise from 4,265 homes for sale in January to 4,592 homes for sale here in May. Not a huge difference, but it is going up. And it's important to realize this is because as sales start to tick up and prices start to rise, there's actually less people with negative equity. And that frees up a whole group of people that can now sell their homes that couldn't before. So the reason prices are going to be going a little bit crazy right now, again, is that there's not enough inventory for the amount of people that want to buy, but that will start to correct. It's hard to determine how long that's going to take, but as that situation does correct, prices will start to stabilize again. And then clicking back over here to the national level of inventory, we can see that Richmond's very similar to what's going on. It's been having a slow rise since the beginning of January, just mostly because those people who were underwater, even just a little bit, are able to now sell their house and move. So let's take a look from January 2012 to current as far as interest rates are concerned, because interest rates are definitely playing a big part in what we're seeing here so far in 2013. And you can see that the last jump is pretty dramatic. When we come to interest rates, the government is definitely having a lot to do with massaging interest rates almost on a daily basis. They're taking a look at the economy, and if the economy is doing well, they're saying, well, we don't really have to stimulate it by keeping rates low, and we'll let them tick up a little bit. But if one bad thing happens in Europe, the government might jump back in and say, oh, well, we have to massage those rates, stimulate the economy, keep things looking good. But right now, what we've been seeing, it's definitely been a pretty dramatic increase. I don't know if I was a buyer how much longer I'd really wait. If we look at just this year alone, we can see that interest rates are as high as they've been this year. And matter of fact, they've almost as high as they've been in the last full year. Now remember, most buyers, they're concerned about how much is this home going to cost me. And that is partly interest rate and then what the price of the house is going to be and how both of those play together. So over the last several months, we can see that two things went up, price and interest rate. So that means the cost to a buyer is definitely going up. And if we go and look at the analysis of three major analytics, the Mortgage Bank Association, Fannie Mae, and the National Association of Realtors, what their projections are for interest rates a year from now, not just the end of 2013, but June 2014. So if a person waited a year, this is what you could expect to pay in terms of interest rate. Of course, this is just a projection. No one has that crystal ball. But again, I think these numbers are definitely going to be starting to increase closer to 5%. So thank you so much for watching your June 2013 Richmond real estate market update. If you have any questions at all, please feel free to call me, Alex, at 804-396-3196, or shoot me an email at alex@alexsellsrichmond.com. Both will be listed in the description below. Thank you again for taking your time, and I'll see you next time. Thanks.